Welcome back to Trade Pro FX. Today is another amazing video. So I will be explaining to you the key things that someone as a trader, what do you need to know when it comes to trading. So that's why I'm pushing the market towards that side so that I can begin to show you the key things that a trader needs to understand. So there is the trend of the market. So we have both the uptrend and the downtrend. So those two are the key things that as beginner trader needs to know, that you need to understand what do we mean when we talk about the uptrend and what do we mean when we talk about the downtrend. So we have the uptrend. Let me now look for the path on my tools section. So when I pick my path, I'll be illustrating to you the uptrend. I've always done this before. So we will be drawing the uptrend, and the uptrend means that whenever you ever see the market is creating the higher highs and then the higher lows and then the higher highs and the higher lows, the market is trending upwards. So with these concepts, as a trader, you need to know that now I'm trying to move to the up direction. That's why the market is trying to make these higher highs and the higher lows. So as a trader, kindly start understanding how do I know now that now we are moving to the up direction. As I've said, that's when we begin by creating the higher highs and then the higher lows, the higher highs, the higher lows, the higher highs, and then the higher lows, and then the higher highs, finally the higher lows. So this concept is very essential for a trader or anyone who wants to begin to trade. So with that concept, it normally makes, as the market is moving towards either the direction of the uptrend or the downtrend, we mark these sections. You can see the higher highs, and then the lower lows, the higher lows, the higher lows, the higher lows, and those higher lows. So whenever you can see such kind of a market moving towards the up direction, what does it mean? It's creating the BOS, the break of structure at those points, that point, and then the next point, it has created a BOS there, it has created a BOS there, it has created a BOS after that point. So you can see how it's very easy to know when we are moving towards the up direction, and the BOS shows us that there is a continuation of the market towards the up trend. Moving on to the next point is talking about whenever the market is moving up, that's when creating the higher highs and the higher lows, and then reaches at a point, and then at once it moves down. That's what we call the change of character, or the CHOCH. So that's the market, it comes down below that area which is our higher low, and then moves down. So it creates something we call the change of character, and this now marks the change of the direction of the current market when it breaks that point. So it must break the higher low of the previous current movement of the market. So that's the CHOCH, that's the change of character. What we were looking before was the BOS, then that was the break of structure, the market moving up, and then it makes that change of character, the market starts moving down. So I hope we are together to that point. You see that movement, you just know that now we have made a change of character towards the down direction. So it was currently making the BOS, the break of structures here, and then now the market has finally ended its momentum towards the upside and created a direction towards the down side. So let's now move to the next area. That's now the downside. It's similar to the up direction. So for a downside or a downtrend, it makes the higher lows and then it creates the lower lows. It creates the lower low like that point, it creates the higher low. it creates a downside for creating a lower low and then a higher low. So it's just the opposite. It also has the continuation towards the downside. And what does that mean? It shows us higher lows and the lower lows, and it moves towards the downside, also making break of structures. So we can see that this area is of a break of structure, that's a break of structure, and that's a break of structure. So it shows as a down trend. So similarly, whenever the market again moves to the towards the up direction, it shows a change of character. So with that, we have now the concepts of what we expect when we see the formation of those candlesticks. So let's move on to the next key thing, and that's the demand and the supply zone. The supply zone or the demand zone, let's start by drawing the demand zone. Make such kind of movement, then a spike. You understand? Whenever you see such kind of a movement, it makes more movements and then a very big spike. You look at this point here. That point shows you look at the candlestick that has formed among the last points, and then you mark that zone as your demand area. So you expect that the market, whenever it comes back to that zone, it will definitely bounce back and move to the direction that it was moving to. So you see, you have now known how the demand zone is marked. So you'll just wait for the market to move towards the downside, and when it reaches to that point, you can pick a trade towards the up direction. That's the way normally a trader trades the demand zone. So you just wait for a long spike and wait for the market to come back to that section. So that's the demand zone. Now we go to the supply zone. I hope that point you have grasped that. Next, let's talk about the supply zone. Towards the up, we will draw for this moving towards the down. So it makes the market moves like that and then makes a spike towards the direction towards the downside. What do we do? Similar as I had told you, you just mark the candlestick that will be the last candlestick there, and there is where you draw your rectangular position. That now that becomes your supply zone. And whenever the market reaches that area, after that spike, long spike, the market will have to change the direction towards your direction, which was currently a downtrend. So the market moves, and then when it reaches to that point, it goes down. I hope it's just that simple, guys. Very simple. The market goes now down. So you see, it's very easy to identify the positions for to enter such kind of short positions when you see a supply zone, and then you put your stop loss just at the top of that candlestick, and you pick a short position because that now becomes your supply zone, and the market will respect that. So let me talk of the last key thing that a trader needs to know. That's the resistance and the support. So I've talked all of them. So how does the resistance? So whenever you find that the market moves, hits at one point, then hits at another point. So let me repeat drawing this. So how do we identify the support and the resistance? Most of you have known how to identify the support and the resistance. So the market, you see the market has moved up, reached at that zone, then it has made its direction towards the downside, reached at the same zone that it was, then moved up because the market moves, creating sweeping liquidity, then moves down. So these points now become either your support and your resistance zone. So the down part, this down part becomes your support. So that is now your support. Whenever the market reaches there, it bounces back towards the top part. And then what does the top part become? The resistant zone. So that's basically how you identify the support and the resistance. I hope now if you are a beginner, you can spot these kind of zones. Mark such kind of zones that the market, whenever it reaches at that point, you pick a trade, because you know it will respect that support, and whenever they reach the upper parts, you just know that it has reached towards the resistant zone and the market has to make a change to the direction. So these areas must be very crucial if you want to make it in the trading game. That's both the forex and the synthetic markets trading. So that's it for today. I hope all beginners now have understood, or anyone who did not know the concept. Then we will go into actual trading using the 1 minute. So because that's the point most of the people like understanding, and trading using the lower time frames 5 to 15. So that's it for today. Let's meet in the next video. Kindly subscribe, share and comment this video. What do you want to understand? Let's meet in the next video.